I will record. All right, Realty Executives in the Villages. We're going to be talking about insurance. We're going to be talking about sinkholes. We're going to be talking about roofs. And we're going to record on the cloud. And we're going to let Scott in.
All right.
Good stuff. Good. So yeah, we're seeing a lot of issues right now, aren't we? Have you seen anything in the last week with roofs and insurance?
No, nothing. I haven't seen anything this week. No. I have the two listings I have. One house is 2004, but it's got an architectural shingle roof, so I should be okay. The other one is on the historic side, and I don't know how old the roof is. The owners haven't replaced it, so I don't know what would happen over there if manufactured homes are under a different set of rules than site built. I don't know.
Oh, interesting. Okay. Okay. Good. That's a good question. I think Scott's trying to get on. He's here. This is, I think, Scott's first experience with Zoom. So I'm sure he'll be able to join us shortly. There he is. He's unmuted.
I can see all of you, but I don't see a thumbnail of me, so I don't know if my video is active or not.
At the moment, it's not. Do you have a camera on your computer?
Yes.
There you go. There you are. Super Scott. Yes.
The world of Zoom. I'm so excited.
Yeah. All right. So everybody, by the way, this is being recorded as well. So just know that. Don't say anything. Don't misbehave on the call. Scott Cameron, State Farm Insurance, longtime pal. Lots of respect as a business person, as an insurance man. Has a lot of knowledge, and he's going to share some knowledge really specifically. We've got a couple of things. Like Scott and I spoke yesterday. We were talking about, the roof issue and insurance, and there's a battle between insurance companies and roofers and homeowners, and getting insurance and not being able to get insurance if the roof is, older than 13, 14, 15 years. Also, Scott, I want you to describe, the differences in insurance. Like there's differences, like you were talking about yesterday, Mercedes, Yugo. So without further ado, Scott Cameron, take it away, brother.
So, when folks ask me for home insurance, or when I visit with real estate professionals, I typically ask, put me on your list of 3, but encourage the customer to call me if they're out of state, moving to Florida, so I can visit with them about the home insurance marketplace, because in Florida, it's unique. You guys may not be aware of this, and I hope you can see this when I put it up, but this is EverQuote, a company that provides services to insurance carriers. And this is a part of their article about the top 50 home insurers in America. And if you look at that article, you'll see that on the first page there, almost none of them will write a home policy in Florida. So think about that. Allstate, the number 2 insurer in all of America, will not write a home policy in the state of Florida. Nationwide, one of the top carriers in the entire country won't write home insurance in Florida. Liberty National won't, USAA won't, Hartford's, Travelers. And you got to ask a customer, why is it that the national brands have all fled Florida? It's the combination of sinkhole risk, hurricane risk, and politics and rate making. In fact, on that NetQuote article, I've got highlighted here in blue, the 33rd largest home insurer in America is Citizens. Citizens is the Florida government-owned home insurer. Their underwriting rules require them to be the carrier of last resort. For me to do a quote with Citizens, I have to certify that my primary carriers decline the risk. When I submit an app quote request into Citizens, their software shops the data to 14 different takeout carriers. If any of those carriers offer coverage, I can't put it with Citizens. That's the 33rd largest home insurer in the United States of America, a company that only writes homes in Florida that no one else wants. And I asked the client, does that sound like a healthy marketplace to you? Now, the consumer then is looking at one of the few national brands that are left, or they're looking at a Florida-only insurance company. The Florida-only insurance companies, there's an entity in Florida for failed insurance carriers. It's called the Florida Insurance Guarantee Association. That's who handles insolvent carriers. On their website for insolvencies, there's 20 pending insolvencies. 20 carriers have failed since 2011. 3 carriers have failed since October of 19. So we're a state where most of the national brands won't write a policy. And these Florida-only companies, about 3 a year, go belly up. And so in that marketplace, I would argue a customer probably doesn't want to be price shopping as much as they want to be quality shopping. Sometimes as real estate professionals, we want to get them to the closing table, and I certainly respect that because that's how everybody gets paid. But we're asking that person to insure their single most valuable single possession on earth, their home. And then it so happens that everything else they own is inside of it. And in a state where the national brands won't write a policy and 3 or 4 carriers go belly up every year, it seems to me like financial strength should certainly play a role, if that makes sense. When we look at carriers, we look at their premium they collect every year compared to their net worth. And I'm just going to read you a few big companies I compete with. American Integrity. They've got 23 cents of net worth for every dollar of premium they collect each year. The net worth, their surplus, that's what they're going to use to pay the hurricane. The State Farm, by comparison, we've got $1.21 in the bank for every dollar of premium we collect. We intend that if the next Hurricane Andrew hits, all of our checks are going to still clear the bank. Some other examples, Castle Key, 14 cents of net worth for every dollar of premium they collect. American Strategic, 63 cents in the bank for every dollar of premium they collect. Let's see, St. John's, a big carrier, 19 cents of net worth for every dollar of premium they collect. That's the solvency number, the can they survive a hurricane number. Now, we were going to also talk a little bit about the difference in carriers' rules for resale homes that are not new. Most insurance companies now require a 4-point insurance inspection. So while your buyer is getting their inspection for making sure the home doesn't have any inherent problems, they're also asking for a 4-point insurance inspection. One of those points is roof age. And we know that if the roof inspector on that 4-point says the roof has less than 5 or 7 years of useful life, many companies are wanting a new roof before they'll insure the home, right? Is that a problem y'all are running into?
100%.
Yes. And so what do you do in that scenario? Well, one of the things that we have done for some folks, if I have a direct conversation with a buyer and the buyer is committed to putting a roof on, if we can get them to closing, we'll write the policy knowing that State Farm is going to give us 45 days to cancel it. So long as the client understands I got to replace that roof. If they've got the roof replaced within that 45-day window, then we provide evidence that the roof has been replaced and we can get the policy to stay in force. Now, that's not a practice we want to be in all the time, but for finding a way to get your customer to the closing table and get the job done, that's a process that we have done in the past for some folks. And, you can't turn a dead roof into a good roof to get to the closing table, but we can get through the closing if we have a known process to replace that roof afterwards.
So Scott, time
Scott?
out right there. I want you to say everything you just said again, because we had a bunch of people just come on at the same time. And I think what you said might be one of the most important things that we need to cover. So say that again. We're seeing that issue. What's the solution?
Hey, Pat Serafino, I haven't seen you in forever.
I am now Santa Claus.
I love it. Looking great, buddy. So what we've done before with a buyer that had a desire to buy a home and the roof is not going to pass that inspection is, if I'm able to have a conversation with that buyer and they convince me they intend to replace the roof soon after the purchase, the problem there is, right, the seller doesn't want to pay to replace the roof because the closing may not happen. And the buyer doesn't want to put money into a roof for a house he doesn't own. So what do we do? If I get a commitment from the buyer that they'll replace the roof within about 30 days of the closing, then we'll go ahead and bind the policy. State Farm will start the cancellation process because the roof doesn't qualify. But so long as we get that roof on and evidence that the job is complete before the cancel date, then we will keep the policy in force. In fact, their price will come down significantly because they put a new roof on an older home, their home insurance price. And so that's a process that we've used before with good buyers to get the client into the house they want, get the realtors paid, and everybody's happy. and within 30 to 40 days, we've got a new roof on the house. They actually get a partial rebate on their home insurance and get to move on with that home. And they're with State Farm.
Hey, Scott, with all the roofs going on right now, a lot of the roofing companies may be out 2 or 3 months because of the volume of jobs they're doing. Would some type of an agreement from the roofing company to the buyer or seller, who's ever paying for it, suffice to say, okay, we're under contract to replace your roof. It's going to be done as soon as we can get to you, but we can't get to you for 45 days. Is that okay?
That doesn't work because an insurance company has a limited time to accept or decline a policy. And so once we make it past that window, we're on that risk for a year. And so that's the reason that's a timing issue. But now imagine we did an offer on a house with a 30 or 45 day close, and my policy is effective on the closing date, and I've got 45 more days to get a roof on it and complete it, right? So, we're approaching 60, 75 days there of leeway from the offer through the closing to up to 45 days after the closing.
So it's not, if the closing is within 45 days, you don't have to have the roof replaced before closing. 45 days after the closing,
That's the point.
it needs to be replaced.
Yeah, the point is let's do an example with dates, because that always helps. Let's say it's a June 1st effective date, a June 1st closing. When I submit that app with that roof report saying there's 2 years of useful life in the roof, right? State Farm's going to immediately start the cancel process. They're going to send a letter to the client. You got 45 days. We're going to cancel you. Okay. But I always do these with an agreement from an underwriter, and I get their name and the other client agreeing. And we believe, because of the timing from the offer with the 45-day close or 30-day close, right? So we're going to close in June, but we know in April we're working on this, right? So in April, we're lining up a roofer with our offer for a June 1st closing. I bind the policy to be effective June 1st, and that means July 15, it's going to cancel because of a bad roof, right? If that roof's on and paid for before July 15, and I get that evidence into my underwriter, they rescind the cancellation and the policy continues on for the rest of that first year. Although it's going to continue on at a lower price, because now I'm getting new roof discounts, and actually it's a real win for the client. They're getting some money back from their closing. That makes sense? So again, we made an offer in April. We closed June 1st. We've got till July 15th to have a new roof on. Does that make sense?
Good.
Yeah.
So
Now tell me how to get around all of this.
well, again, you're negotiating on that house, and we're kind of having to pre-line all of that up ahead of time. So we've got to know we've got a roofer that's got him on the calendar, or that client on the calendar, and all of those things, and we can make that happen. I want to be in personal contact with that buyer, because at 42 days and they go, gosh, we got 3 more weeks to go. There is no extension on that, because really what we're doing is, with State Farm's permission, I'm playing with the cancellation process there to get you guys to closing, get a client in the home, because the client has already confirmed to me they are going to quickly replace the roof. And that way a good buyer gets to be in the home they want, and we get around that sticking point.
Is there any way, with paying a higher premium, a separate higher premium for the roof, anything that I could buy myself 6 months to a year to shop around for a better price or a better whatever?
On a roof?
Yeah.
No, what I'm doing is I'm binding a policy that I know doesn't qualify with permission of an underwriter, and we have to either be on or off it within 45 days. So there is no negotiating that, because it's based on the cancellation process in Florida law. If it's 46 days and we haven't canceled it, we're on it for a year. So my underwriter's not going to play with that by 1 day. But if we can line all of that up, it's a time where we might be able to get around that problem, which I know is a headache for many real estate professionals.
Right. So Scott, what are you looking at? What are the underwriters looking at criteria wise? Is it any different, or is it pretty standard when you're looking at, State Farm versus any other company? What are they really looking at? Okay, yes, you need to get a new roof.
Well, first of all, we don't require a roof a 4-point inspection for homes less than 4 years old. I mean, less than 10 years old, forgive me. I think that's a little more relaxed than some carriers. Okay, so a house less than 10 years old, we do not require a 4-point inspection. That's saving a little bit of money at the closing table and that type of thing. But the biggest differences that I would want you to understand is not so much underwriting differences as some of these other differences. I didn't realize I had my little. I'm not probably going to be directing any airplane traffic for the rest of this thing.
It looks good on you, man. It looks good.
Yeah,
Looked official.
that's right. So it's more, in my opinion, about quality of contract. A lot of the companies I compete with right now are doing actual cash value on the roof. We're still replacement cost on the roof. So 6-7 years down the road, your client has a roof claim, they got to replace the roof. Does the client want the roof replaced, or do they want half the cost of the roof replaced? State Farm still does replacement cost on roofs. Many carriers now have an interior water damage limit or exclusion. Some carriers say if your water heater fails and puts water throughout your home, there's no coverage, or there's a $5,000 limit or a $10,000 limit. The client doesn't discover these things until claim time. State Farm has not created new Swiss cheese holes in our policy. We're still selling a policy that's very similar to what all of us on this thing, there's a few folks on here with gray hair. The policy you bought 30 years ago, that's what we're still selling, is replacement cost on your roof, no special water damage limit. Some carriers have a floor covering limit, $5,000 or $10,000 for damage to floor covering, because they're saying floor coverings, if you can believe it, their contract says are not appearance items. They're utility items and have a limit for cosmetic damage. That's how carriers are getting these prices that, you know, in Florida, you look at it and say $800 to insure that house seems kind of low. That's how they're doing those things, in addition to the sinkhole. And you guys, if we could do a whole separate thing on sinkhole, but I'll hit that fast because it's important for you guys to know what coverage you have on your homes. If you have catastrophic ground cover collapse on your home policy, you have no coverage for a sinkhole. 4 conditions at the property. You have to have a depression in the ground visible to the naked eye, like a big hole in the yard threatening the home. A collapse of the ground cover. There's a hole in the bottom of the bowl in your yard. Foundation damage. And 4th, the house is condemned and ordered vacated by the city or county. Now, I've paid 80 sinkhole claims in my agency. None of them was the house condemned and ordered vacated. If you have catastrophic ground cover collapse on your home policy, that's what your coverage says. No coverage unless it's condemned and ordered vacated. When you have full sinkhole coverage, which is what State Farm offers, if you have settling at your home, we send an engineer. If the engineer drills around your home and finds a void underground, we pay to fill the void and fix the house. You don't have to have a visible sinkhole. It doesn't have to be condemned. All those other rules don't apply. An engineer says it's a sinkhole, we fix it. Further, most carriers' catastrophic ground cover collapse coverage has a 10% deductible. If your buyer has a $300,000 house, his deductible is $30,000 if they're going to pay. With our policy, the deductible for sinkhole losses is the same as fires and thefts, perhaps $1,000. At claim time, I'd rather pay $1,000 than $30,000. And so there's a lot of differences. Home insurance is not soybeans in Florida. That would be the big thing I'd point out.
What are the limitations to getting that type of coverage?
Well, for sinkhole coverage, most carriers in Florida, well, in Marion County is what I'm familiar with. So let me say in Marion County. In Marion County, most carriers will not offer full sinkhole coverage to a home that's within 5 miles of a known sinkhole.
Well, that takes out every home north of 466.
Right. State Farm's underwriting rule is we will inspect your home. If it is not directly adjacent to a known sinkhole and it passes our third-party inspection, we will offer sinkhole coverage. So my neighborhood, Lemonwood 2, if I stood on my roof, I could hit 5 other sinkhole houses with a baseball from my roof. State Farm would do sinkhole coverage in Lemonwood 2. They just wouldn't do it next door to a sinkhole house. 2 doors down, we'll do sinkhole coverage. Does that make sense?
Yeah, but how expensive is that coverage?
Well, let's say that a guy or lady had a homeowner's policy of $1,600 for all other risks. They may have another $220 in sinkhole coverage.
Oh, okay. Well, that's not bad.
What I recommend to people is this. Now think about this home insurance strategy to not mess up our DTI, not mess up our closing costs, but put our client in an absolute Mercedes-Benz, not a Hugo. You guys remember Hugos when they came out, right?
Yeah.
Home insurance, what I find a lot of times is the buyers are coming into the Mercedes dealership with a Hugo window sticker wondering why the price is different. And that never happens to a Mercedes dealer, but it does happen to a home insurance agent. And so what I would tell you would be for a good customer, a $5,000 deductible on a State Farm homeowners policy with sinkhole coverage is a similar product with far better protection for that family than a Florida-only company with a $1,000 deductible, catastrophic ground cover collapse, and a carrier that's got 20 cents in the bank for every dollar of premium they collect. To me, the client has transferred a lot more risk to State Farm. When they're with that Florida-only company, they might be retaining, one of the risks they might be retaining is the risk of carrier failure after a hurricane. State Farm's never bounced a check in 90 years. We've never let a subsidiary fail in 90 years, and we're the 27th largest company on earth. We don't bounce our checks. So the client's transferring all the risk to us when they buy a State Farm home policy, if that makes sense.
100%. I love that. Any questions for Scott?
Yeah, can you cut me a check?
Scott,
Life insurance.
I have a question. And
Hey, what are you?
I apologize, Scott. I came in late, and you
Yeah.
may have already covered this. In my area of the villages and shortly in Pat's area, these roofs are 20 years old, and we've all been told to replace our roofs. And every day on my street today, there were 3 roofs being replaced. I already had mine done. And most of these roofs are being done with insurance coverage. You know, they tell them, well, we had a storm and lost some shingles and so on and so forth. What's going to happen to the rates, the insurance rates, because of these false claims?
Well, you know, over time, the Florida consumer in any zip code is going to pay a premium commensurate with the claims and expenses in that zip code, right? And so many companies use the ISO charts and data. They're all sharing data. State Farm has enough volume in each county that we develop our own rates based on our own claims experience. But over time, if insurance companies are paying to replace roofs that really are ruined because of age, but they're paying them as insurance claims, that's going to drive their prices. If I were to refer back to my little home insurance book, I got that list of Florida-only companies, and I think on my chart, the following companies are paying more than $1 of claims and expenses for every dollar of premium they collect. So Security First, St. John's, Universal Property and Casualty, People's Trust, Windhaven, Florida Specialty. Those are all carriers with a combined ratio, and also Auto Club, AAA, combined ratio of over 100%. They're paying more than $1 of claims and expenses for every dollar of premium. And that's why what you've seen recently is several carriers have started renewing policies. Several carriers have rate increases right now, right? State Farm's on our second round of rate decreases on home insurance, and we've increased our home auto discount in the last year. So our combined ratio, kind of that's your profitability, right? Combined ratio for State Farm right now is 89.8. So if we collect $1 of premium, we're paying, let's just argue and say we're paying 90 cents in claims and expenses. And so that's why our rates are trending downward right now and our discounts are trending upward. But if carriers keep paying roofs that are going out because of age, over time their prices are going to go up and they're going to file for, like Florida Specialty went under in October of last year. So.
Okay, well, I can understand that a lot of the homes like the 3 on my street, which had no damage, but they put the claim in and they got accepted. I can understand their rates going up, but me, I paid full boat. I paid for my roof. Will that happen to me too? I mean, if they're generally going up, is mine going to go up too?
Well, first of all, it depends on what carriers are paying all of those claims. Let's pretend they're companies that are too small to have, an adjuster presence. And if they make a claim, they pay over time. That one company is going to have rate increases. It will tend to drive up prices for small companies that use the ISO rate tables because the claims and expenses are going to work their way through that. Bigger companies develop their pricing based on their own claims experience. But we want to also remember this. You're making the same argument when a guy turns 75, his auto rate goes up a little bit. And you say, well, part of your price increase is because you reach 75. And he says, well, I haven't had any claims. Well, the reality is what I can see on the screen here is 4 other males. We were all 16 once. And whether we had a ticket or an accident, we had to pay a higher price because we were 16-year-old males. Okay. And the price is based on the average rate problem for all 16-year-old males. Now, within all the 16-year-old males, the kids with tickets paid even more. The kids with good driving records and good grades paid a little less. Now, for you, what you would see would be if you're with the same company as those 4, there's going to be a rate increase, but you may get a discount for a new roof. So there's an upward pressure and a downward pressure that whatever. But
Okay.
over time, if companies pay for roofs they don't owe, prices are going to go up over time. And that's just the reality. But, for you, if you have a house over 20 years old and you just replaced your roof, did you get one of those windstorm inspections?
Yes, I did. I got wind mitigation. My insurance went up to $2,700 last year. I got a wind mitigation. It went down to $2,400.
That's
Then
the biggest argument. And you get that.
I put the roof on, my rate went down to $1,300. It dropped in half, but I paid $11,000 for the roof.
Right. And that's what I'm finding. 2 years ago, I would have told you on an older home, State Farm's going to be high. We're going to be crazy high, I would have told you a couple years ago. And then on a newer home, we're going to be a little high, but justifiable. Today, what I would tell you is on an older home with a new roof, and if they bring the cars over, we're going to be tough to beat even on an older home on the package, especially if they put a roof on it and have a wind mitigation. So then they're moving to a superior carrier, better contract, better financial strength, and a similar price to what they're paying now. And so that's kind of where I think that our market position is right now. And that's not a bad place to live.
Hey, Scott, the biggest question is the competitiveness of the bigger carriers. I'm going to say your State Farm, Allstate, or, the 3, 4, 5 out there. I would assume that you guys are pretty damn competitive in your pricing. Would I be assuming right or wrong?
Well, let's go back to the beginning of our visit together. Allstate doesn't write home insurance in Florida. They pulled out.
Right. Well, okay.
Nationwide doesn't write it either, and neither does Hartford, Travelers, or USAA. I would argue when you tell me the other big national brands, list a few of those guys that are writing policies.
Right. They're brokering it out.
Universal.
They're brokering it out.
Like I said, my knowledge of insurance on is that big.
Right. And that's the point that I would want to make is in a marketplace of Yugos, there's only a few Mercedes-Benzes that are really writing. And I mean, I'll just share with you.
They can ride listing.
Tower Hill is a national brand. So Tower Hill is a national brand that's still writing policies in Florida. But when you name those names that come immediately to our mind, most of them are not writing policies in Florida. So,
Scott, I had a question.
yes.
Yeah. Go ahead, Annette.
Because, and I'm sorry, I kind of came in a little bit late too. You might have addressed it in the beginning. But what constitutes an unacceptable roof?
A hole that big.
I get that. I mean, that's pretty obvious. But other than that, because I know you guys all had issues, roofs and stuff.
So that's a great question. Most carriers have a age of structure rule. If the house is over X years old, they want one of the 4-point insurance inspections. For State Farm, it's 10 years. If the house is over 10 years old, we have to have a 4-point roof inspection. And then our 4-point insurance inspection, which includes the roof. That roof inspection is going to include a useful life number. Most companies are not wanting to write insurance on a home with a roof listed as a useful life of less than 5 or 6 years. And even if they do write that policy, if they tell me it's a useful life of 4 years and we write it, within a year or two, we're going to ask for a new roof. And so is everybody else. That's what all the companies are doing, because a roof really is a maintenance issue. And so that's the rule of thumb. So to tell you what the roof issue is, it's more based on the roof inspector. You guys know there's 30-year roofs, but we all as Floridians know that 30-year roofs don't last 30 years in Florida.
So it's not just the wind mitigation. It's got to be a 4-point.
Over a 10-year-old home for State Farm, other carriers have different rules. I think Citizens wants a 4-point on every house. And so then the roof, the 4-point, the guy's gonna or lady's gonna put a roof useful life on there. That's what's gonna determine what the insurance company wants.
Okay, thank you.
Makes sense. Francis has a question. What is the expectation that we should be setting with our sellers? What is State Farm looking at when considering the roof? Is it age alone, or condition?
Well, the age, the 4-point inspector is pegging a years of useful life number based on age and condition, but it's more condition than age. I've seen roofs 10, 12 years in that just look really bad. I don't know if that's original quality of material or, some quality about just the direction that roof is pointing in or something like that, but the roof looks really thin and brittle and it's only a 12-year-old roof. They're going to say it has a very limited useful life and an insurance company is going to want a new. So it's hard to take a raw age and give you guys a rule of thumb to work with. But I would argue somewhere over 12 or 13 years, the 4-point could start to give you headaches when a roof is over 12 to 14 years old. That's when you might start running into short useful life.
Scott, I have an unusual question for you. So based on what you know, you're in a situation where you're a homeowner, you're a seller, you're about to put your home on the market. And we've got Francis who approaches you and say, okay, let's put your home on the market. And you know that your roof is also, it may have what you believe is about 6, 7 years old, or 6 or 7, 8 years left of life. It's about 13, 14 years old. What would you do? Would you replace the roof? What would you do? Would you get a 4-point inspection? What's the move?
Well, you're asking me seller strategy to an insurance guy, so I'm going to be winging.
Yeah.
Have I got a deal for you?
Yeah. Is there a contingency from the seller's perspective that says, if the inspector says I need a certain amount of dollars cost of work done, I can get out of this contract? So, the contract you guys use, the standard real estate contract, doesn't it say if there's a certain amount of work required based on the inspections?
Yeah.
1.5% of the price.
I can get out, right?
Right.
So I guess the only thing a seller has to do is, and I had this more with that radon gas. I was buying a house and State Farm has a thing that if they transferred me, promoted me, they buy my house, but I have to have a radon gas inspection first if it's a Florida house, and I have to pay the mitigation. So in the house I was buying as a manager, I did a radon inspection because I figured if it's got radon problems, I want to know before I buy it and not get ambushed on a promotion. So it had a negative radon test, and my realtor, Tom Bartlett, if you guys know Tommy, Tom Bartlett, I didn't know him. I was living in South Carolina, and he says, why don't you split the cost of radon mitigation with the seller? And I said, no. I said, because now the seller, if I back out, the seller has to disclose a radon problem to every future buyer, so he's paying it all. Now, that was a buyer's perspective, and you guys are probably saying, don't list the property with Cameron. He'd be a pain. But I would take the same thing. I would think if a seller discovers that a 4-point inspection, due to the age of the house, it's going to be the new buyer is going to get a 4-point inspection to insure it. And now I know the 4-point inspection is going to say 2 years of useful life. Nobody wants to insure that house. Right?
Yeah.
Now the buyer has to sit down and realize all future buyers get disclosed that this roof has 2 years of useful life,
Yes.
I might want to consider having an escrow from the sale, maybe we increase the sales price, because isn't that sometimes easier for me to buy a house with a little more cost than for me to buy a house and turn around and put a roof on it? Trying to negotiate a thing where let's up the sales price and have escrow monies in there to put a roof on shortly after the sale, or make the closing far enough in advance that we can put a roof on it. But again, you're into the seller's roof there. I would argue once the seller knows he's got no useful life on his roof, he's going to run into that problem with any future buyer too. Is that correct?
Correct.
Yeah. And actually, a really good point is, and Steve and I were talking about this earlier, right? Steve, what did you come up with on the value of a roof, a new roof?
Well, I did some research and they were telling me that, I think it was the National Institute of Remodeling or something like that, National Association of Remodelers. Said
Since
that
when you know those high-end words?
I look up some big words once in a while.
Yeah, okay.
Once in a while. I don't know how to spell them, but I look them up. They said that a new roof brings about 60 to 70% value, the cost of the roof, home value increase. So a $10,000 roof brings me $6,000 to $7,000 in home value increase.
Versus the alternative, if you don't put on a roof, you might be paying for the whole darn thing because you got a buyer like Scott that comes in and says, this is your issue, right? So you have to pay for the $10,000 yourself. So that's why it's probably a good idea to mitigate the problem in advance. I think Scott's as a seller, from the seller standpoint.
Yeah, and I mean, having that article in the hands of a buyer and say, look, you're going to spend 10, you're going to capture, 6 in increased value. Maybe we can get this buyer, we'll increase the sales price by 6 and get the buyer to make some type of a concession so that you guys are going 60-40.
Yep.
And that should square it up.
Yep. Makes sense.
They usually look at our commission to cut our commission to make up the difference.
I did not say that to Tommy. I just want you guys to all know that.
But I saw your eyes, Scott. I know you,
Scott, I have a question for you. A lot of times we'll see like a home inspection that's been done and the inspector will go out and do the wind mitigation, and their report comes in stating all their stuff, and that the roof expectancy is X amount of years. And sometimes, maybe the buyer, the seller, or even both, whatever, isn't happy with what that home inspector has come in with the wind mitigation. So they decide they want to have an actual roofing company come out and do a roof inspection and see if they get a different answer. So as an insurance person, what is the better quality of that, an actual roof inspection by a roofing company or a wind mitigation by a home inspector? What?
Well, you got a great question there, and I'm going to parse some words there. I hope you don't think I'm being picky, but there's 3 inspections that we're talking about there. So a 4-point is an insurance inspection that most carriers require to insure a home. It's a 4-point inspection. One of the points in the 4-point inspection is the roof. A wind mitigation inspection is an inspection to acquire discounts on your new home insurance policy. And by the way, for you guys out there and ladies, if you have a house older than 01 construction with a roof newer than 01 construction, you should get a wind mitigation inspection because it'll probably pay for itself every year 2 or 3 times over in premium reductions. So my rule of thumb is who should get a UMVI or a wind mitigation inspection. If your house is older than 01 with a newer than 01 roof, get that inspection done. It's probably $80. You're a realtor, you could probably find a wind mitigation inspector that might give you a deal for future referrals. I don't know how that all works. And if there's some RESPA thing on that, I didn't say it, I take it back and I apologize. I'm not a RESPA expert, but you probably it'll probably pay its freight 2 or 3 times over every year. Someone on the call today said they saved $300-400 a year. They probably paid $80 for that UMVI or wind mitigation inspection.
Yes.
So a wind mitigation is a completely different animal. It only pertains to discounts.
Okay,
A 4-point is an insurance-oriented inspection, and only one of the 4 points is the roof. I would argue many insurance companies would not entertain a separate roof inspection for qualifying the home for coverage, because the way we file our rates is for a 4-point inspection.
okay,
Does that make sense?
yes,
When roof inspections come into play a lot of times is, if we could do a scenario, we're 4 years down the road from a house that supposedly had a 6-year roof life from the 4-point inspection. And my insurance company says, now we want you to replace your roof. And you get a roof inspector to do a roof inspection. He says you still got 5 years left. And we may give you 3 or 4 more years and not require the roof, because the roof inspector, separate inspection, said you got a few more useful years. We're going to renew you for a few more years and not ask for a roof. That's when the roof inspection usually comes in for us.
gotcha.
Does that make sense?
It's funny.
So
you
it's more
say that,
advisable for somebody to do a 4-point inspection than it would be for them really I'm just curious, because I've got a situation right now where they had the inspection done and, the buyer wasn't too happy with what the report was. So now they want to have a roofer come in and do an actual inspection. And I was like, that's not really gonna help you any, I don't think. So,
But the party to answer that would really be the agent that's writing that policy, because their company may have an underwriting rule that entertains that. We don't. We don't have a rule like that I'm aware of. Because as I said, like the UMVI, no other inspection will satisfy the wind mitigation inspection, because it's the way it's filed with the state, right? It has to be a wind mitigation inspection. And a lot of roofers aren't even wind mitigation inspectors. It's a separate license. And so similarly, the 4-point, the way we filed our rates is for a 4-point inspection. So a roofing inspection won't get around that.
so hypothetically, if they say the insurance company doesn't require a 4-point, let's just say, let's go that avenue. And so the home inspector does the regular home inspection, but now they want to have a roofing company come out and do an actual roof inspection. Would they look at that roof inspection?
Well, again, I think that would be, each carrier is going to have different rules on that. Most of the carriers I'm aware of, even the independents, want a 4-point inspection. And so that would be really a question. Let's pretend that's a real client and you're trying to help them navigate that. You would say, hey, you need to talk to your agent and find out if a separate roof inspection can get us around this roof life problem.
Gotcha. Okay.
That's good. That's something Brenda handles pretty much every day, because she's the transaction coordinator. She's doing a lot of that, obviously.
Okay.
I see different avenues all day, every day with insurance people and inspections and stuff. That's why I was kind of curious how that would benefit someone.
Yeah, and again, I don't know the rules for all the carriers. I know the rules for State Farm, and I bump into rules from other carriers when I'm competing against them for one specific case, if that makes sense. But the agent that's placing that policy would be the one that would be able to call an underwriter, find out what would a roofing inspection do to get us around this. And that would almost be a case by case, because the same agent may place 3 different customers with 3 different carriers, right? So on a case by case, that's how you'd explore that to help your client get to closing.
So any other questions for Scott? We're about to wrap it up. Scott, I do have the last question I have for you, unless somebody has another question, is if you could tell us, look, you do insurance, obviously, but you do a lot more than insurance. Tell us about some of the things that you do.
Well, there's 19,000 State Farm agents in our company. And for the last 8 years, I've been the #1 mortgage originating agent in the company. Recently, the weakness we had in the past was we only did conventional loans. And so recently, State Farm divested from the bank industry and hooked us up with Quicken Loans. And so now I originate through Quicken Loans, and I have all of the programs any other mortgage originator would have. Now, some folks, I know some real estate professionals have good and bad opinions of Quicken Loans. And I would say this, J.D. Power and Associates, they've gotten ranked #1 in the industry for mortgage origination for 10 straight years. Did you know in financial services, no company in any category of financial services ever gotten that 10 years in a row until Quicken. So Quicken, the customer says, is the best in the industry at getting you to the closing table on time and happy. The weakness with Quicken from a realtor's perspective is if Glenn's buyer is with Quicken Loans, Glenn can't get updates. But if Glenn's buyer is with Quicken Loans referred by me, two things happen. Number one, that buyer pays less at the closing table than if they went direct to Quicken Loans. Quicken Loans gives a closing credit to buyers that started their loan with State Farm. But number two, if Glenn's buyer ends up running through Quicken Loans through me, Glenn gets updates on the file progress along the way. And so that would be the two biggest benefits. So no matter what any other banker tells you, only one bank gets rated number one in the industry by the customers, and that's Quicken Loans. So State Farm and Quicken's strength is high tech, right, and low cost, and State Farm brings the high touch to make a market position of high touch, high tech, low cost. And so that would be another thing. I'm also a chartered financial consultant, and for those folks that desire that, we take insurance and we start with insurance. We educate the client about how it's really a risk management tool. Those of you that have a little bit of money in the bank, every time you start your car, every time you have a guest over to the house to have a glass of wine, everything you own is at risk because Dan Newland would be happy to separate you from your wealth. So we put insurance in its proper perspective, that it's a risk management tool to make certain that no one takes from you what you spent a lifetime saving because you had a moment of inattention at the wheel. And then we leverage that to go into helping folks plan for a great retirement no matter what life brings. Every retired couple faces a pay cut when one of the spouses dies. Every retired couple faces that pay cut. There's always a Social Security pay cut, and there's often a pension pay cut. And so we make sure and plan. This is the biggest thing I find when I look at the portfolio work that other advisors have done is the plan works wonderfully if nothing bad happens. So I'll see a client that's got a beautifully structured portfolio, $1.5 million in the bank, carrying 5,100 liability limits on their car. And when I mention long-term care, it's a foreign phrase to them. When I do planning with folks, I do the portfolio and all that good stuff similarly through State Farm's process, but I'm also making sure the plan works if something bad happens along the way. And so those are kind of the things that I do that are perhaps a little bit different than a typical insurance agent. If for your buyer, I can take them from pre-qualifying for the loan through the home insurance to planning that they have a wonderful life and pass their wealth on to their heirs, even if the road to retirement has a pothole or two.
Love it. Scott, man, you are the best. Well done.
I just have to say one thing for you, Scott. Like Glenn had mentioned, I process closings for a lot of my agents that are at Realty Executives, and I deal with a ton of lenders. And, I know as soon as one comes across my desk, I just go, but when I see Quicken, I will say, yes, Quicken they have absolutely surprised me over the last couple of years. I have been very impressed with them.
I got to tell you, when and I'll be frank with you, I was doing 80 mortgages a year with State Farm Bank, and I had a full-time employee help me. We made our bank look good, but our bank wasn't that great at mortgages. When Mike switched over to Quicken Loans, the first 2 weeks, she sat down with me. She says, I don't have anything to do. And I'm like, what do you mean? She says, every time I check on a Quicken loan, I think it's on step 2 and they're on step 12. And she says, I don't know how they get to step 12 in 3 days, but they amaze me. And that's the experience we've had with Quicken Loans to the degree. I don't have a helper anymore for Quicken Loans. I'm originating 2 to 4 loans a day right now, but a lot of refinances. This is the time, but I call 2 days later and they've got their disclosures and the documents are in. They're in underwriting. I mean, they are unbelievable. Yeah. So I love them.
Scott, how can people find you, man? People have questions. There's gonna be a lot of people watching this on recorded and all that kind of stuff later on tomorrow and the next day. How can they find you?
Well, Scott Cameron, of course, my office number is 352-861-2266. I can be reached. My website is scottjcameron.com. Scott, the letter J, Cameron.com, because some guy that makes putters got the better name. Scotty Cameron putters. So I tried to be Scotty Cameron, but there was a putter guy, I guess.
And all this time, I thought it was you.
Yeah, I just do this. This gig's just for kicks. This is just for fun to me.
That's right.
Making putters is the real thing.
So then cut me a check. Come on.
And Scott at scottjcameron.com is my email. Scott at scottjcameron.com. My pitch on mortgages has always been, you should always give out 3 names. If you give out 3 names and it goes bad, the client ultimately picked. If you give out 1 name and it goes bad, it's your problem. I always tell people, give out 3 names, put me on your list of 3. I'll take an extra moment to educate your buyer on how to shop for a mortgage. That's always been my gig back to years ago when I used to come out and send my wife out there to Realty executives in the villages. We teach the buyer how to shop.
I'm disappointed. I thought she was giving the demonstration, not for me to say.
We have 2 grandchildren, Pat, and
God love you.
she doesn't work at State Farm anymore. She's
Okay.
get her in here.
Please tell her we said hello, okay?
I will.
Hi.
Thanks for your time today, everybody.
Thanks, Scott.
Hey,
Take
Brenda. Hey, Brenda.